Ever wonder why your mortgage suddenly costs more, or why your savings account is paying peanuts? You think it's just market forces doing their thing, but the scenario is completely different, happening behind closed doors, and guess who's pulling the strings of this puppet show of manipulating the interest rates? The government. Yeah, the government is the mastermind behind the fluctuating interest rates, controlling your entire financial life in ways you never imagined. And to your surprise, they do it through their favorite little helpers called the Federal Reserve and central banks worldwide. I know that sounds complicated, but I'm going to explain how everything works in a super simple way. And trust me, you need to know this game, because once you see how it works, you'll never look at the system the same way again. So, let's jump straight into the biggest financial manipulation scheme ever. Chapter 1. Interest rates explained. Interest rates are the cost of borrowing money. Think of it like a rental fee you pay for using someone else's funds. If you're the one borrowing, you pay this fee. But if you're the one lending or saving, like putting money in a bank, you earn that fee. For example, when you take out a loan, like for a house or a car, the interest rate is the percentage of the amount you borrowed that you have to pay back to the lender on top of the original amount. The higher the rate, the more expensive it is to borrow. Now that we have the basics down, let's explore how interest rates get influenced and why that matters to you. Chapter 2. How they weaponize your money's value. Now let's talk about how the government uses interest rates to play games with inflation, essentially weaponizing your money's buying power for their political gain. So, when the government wants to boost the economy quickly, it pressures the Fed to cut rates. This floods the market with cheap money, which eventually leads to inflation, and that hits the poor and middle class first and hardest, while the wealthy actually benefit from it. Just like 2020, when rates dropped and money flooded the system. The wealthy bought stocks and houses that shot up in value. But by 2021, inflation hit the grocery aisle, and milk, bread, and eggs doubled in price. The rich saw their assets grow, while the poor and middle class struggled just to buy food. Another dirty little secret that works great for the government is moderate inflation, because it reduces the real value of government debt, making it easier to pay off. For example, if the government owes $30 trillion and inflation runs at 3% per year, it's essentially getting a 3% discount on its debt every year. Now, who pays for that discount? That's you paying it through reduced purchasing power. But the manipulation doesn't end here. It goes far deeper. The government has figured out how to time inflation cycles to its advantage. They'll allow inflation to run hot during good economic times when people are more tolerant of higher prices. Then, right before elections or during economic stress, they'll fight inflation aggressively to look like heroes. They also manipulate the public with substitution bias, which is like, if steak gets too expensive, they assume you'll just buy a hamburger instead, and then they call this maintaining the same standard of living. But any normal person knows that swapping steak for hamburger is a reduction in your quality of life. They also play through core inflation, which excludes food and energy costs. You know, the two things you literally can't live without. Why exclude them? Because they're volatile and make the numbers look bad. It's like measuring your health but excluding your heart rate and blood pressure because they fluctuate too much. The government also uses inflation as a stealth tax. So, instead of raising your official tax rate, they just let inflation eat away at your purchasing power. The end result is the same. You have less real wealth, but they get to avoid the political heat of raising taxes. It's taxation by currency manipulation. So when they want to create inflation, they keep rates artificially low. When inflation gets so bad that people start complaining loudly, they jack up rates and claim they're fighting for the common person. This is a vicious cycle, and the government plays through it all in hidden ways. Let's look at those ways. Chapter 3. Is Fed really independent? I'll talk about the biggest lie they've been feeding you about the central bank's independence. The Federal Reserve might act all independent and fancy, but guess who appoints the Fed chair? The president. Guess who confirms them? The Senate. And guess who can change the Fed's mandate whenever they feel like it? Congress. Is that what you call real independence, huh? Think about it this way. If you're the boss of a company, and you get to hire and fire the CEO, and you can change their job description anytime you want, are they really independent? Of course not. They're gonna do what keeps you happy, or they're out. So, the Fed is given 3 major responsibilities by the government, which include controlling the money supply, setting interest rates, and keeping banks stable. This means if the economy is slow, the Fed might lower interest rates to encourage hiring, but if inflation gets too high, it might raise rates to slow things down. So basically, when they change interest rates, they're deciding whether you can afford a house or not. And when they seemingly stabilize banks, they choose who gets saved and who gets crushed. Not only that, the Fed also works with central banks around the world. They meet regularly in private, coordinate policies, and make deals that affect billions of people. These aren't public meetings. They're exclusive gatherings where the world's most powerful financial officials decide how to manage the global economy without asking your opinion. It's like a perfect scapegoat system, where when things go wrong, politicians get to point fingers at the Fed and say, "Hey, don't blame us, we don't control them." But they get all the control with none of the responsibility. So, the actual game starts from here. Chapter 4. The political machine behind Fed. First up, the revolving door. Ever notice how Fed officials always seem to end up working for the government or big banks after their Fed stint? And how government officials often slide into Fed positions? Take a look at recent Fed chairs. Ben Bernanke went from Princeton professor to Fed chair to working for hedge funds and giving paid speeches. Janet Yellen went from Fed chair to Treasury secretary. Jerome Powell came from private equity before joining the Fed. These people aren't independent operators. They're part of a club, and club members look out for each other. In addition to that, the government also controls the Fed through budget and regulatory pressure. While the Fed technically funds itself through interest on government bonds, Congress still has oversight over Fed operations. They can launch investigations, change the Fed's mandate, or even threaten to restructure the entire system. It's like holding a sword over someone's head and then acting surprised when they do what you want. Chapter 5. Cooking emergencies for rate control. See, nothing gives politicians more power than a good emergency. It's the government's favorite trick, manufacturing or exploiting crises to justify massive interest rates and manipulating them with lies. So, every major economic crisis follows the same playbook. First, the government creates or allows conditions that lead to instability, and then they act shocked when the inevitable happens. The government then strategically demands emergency powers to fix the problem, and later, they use those powers to reshape the economy in ways that benefit their political allies. The beauty of crisis manipulation is that it allows the government to do things that would normally be politically impossible. For example, during COVID-19, the government didn't even wait for the economic damage to fully materialize. At the first sign of trouble, the interest rates went to zero, and the money printers went into overdrive. And in this way, trillions of dollars were created out of thin air, with most of it going to large corporations and wealthy individuals through various emergency programs. So basically, the government figures out how to extend emergencies far beyond their natural lifespan to be in the game and strategically use emergency rate manipulation, which allows the Fed to do things that would normally require congressional approval. Want to bail out foreign banks? Call it an emergency liquidity measure. Want to prop up the stock market? Call it financial stability. Want to fund massive government spending without raising taxes? Call it quantitative easing. The label changes, but the result is the same. Your money gets devalued to pay for their priorities. The pattern is so predictable now that smart money starts positioning itself before each crisis even happens. They know that rates will be cut, asset prices will be inflated, and those closest to the money spigot will benefit the most. Chapter 6. The global impact of interest rate policies. Interest rate manipulation isn't just a national game, it's a global one. Since the US dollar is the world's dominant reserve currency, the Federal Reserve's decisions ripple across the globe. When the Fed changes rates, it affects currency values worldwide, shifting trade balances, investment flows, and even political stability in other countries. For example, when the Fed raises rates, dollars flow back into the US seeking higher returns, which can cause other currencies to weaken and their economies to struggle. This often forces other central banks to follow suit, even if their own economies don't need it, because capital chases yield. So, what looks like a domestic policy is actually a powerful lever shaping the global economic landscape, often disproportionately hurting developing countries. Chapter 7. Pay attention before it's too late. Alright, now in this rigged game. So, first, stop believing the narrative. When politicians or Fed officials talk about supporting the economy or fighting for working families, understand that they're really talking about supporting their political careers and fighting for their wealthy donors. The sooner you accept that you're on your own in this game, the sooner you can start playing to win. Second, understand the cycle and position yourself accordingly. C. The interest rate manipulation follows predictable patterns. Now you have to learn to recognize when rates are artificially low, which are usually before elections or during emergencies. You should position your investments and debt accordingly. When rates are artificially low, you can borrow money to buy assets that will benefit from inflation. Real estate, stocks, commodities, and things that go up when money loses value. And when rates are rising, focus on paying down debt and holding assets that benefit from higher rates, like bonds or bank stocks. Third, diversify away from dollar-denominated assets. If the government is going to devalue your currency through interest rate manipulation, don't keep all your wealth in that currency. Fourth, build multiple income streams that aren't dependent on traditional employment. So when the government manipulates rates, you can essentially redistribute wealth from savers to borrowers, from employees to asset owners, to make it a win-win situation for you. Fifth, follow real economic indicators, which means don't rely on the government's manipulated statistics. Look at things yourself, like real wages adjusted for real inflation, not the sanitized numbers they feed you, and understand that every government economic announcement has a political agenda behind it. And now, most importantly, understand that this system isn't going to fix itself. The people benefiting from interest rate manipulation aren't going to give up their power voluntarily. The only way things change is if you can understand how the game really works and start playing by different rules. Now, one thing is clear, that this system won't fix itself, because the beneficiaries have no incentive to change it. Politicians spend without raising taxes, Fed officials gain power, and wealthy people get asset price inflation. The only losers are working people who don't understand the game. So, if this video opened your eyes to how the Fed and the government really work together, hit the like button, subscribe, and join me as we keep exposing the truth about money and power. Thanks for watching.